Now let's study about the union budget. This is important from practical viewpoint, so please pay attention to what we are going to learn next. It is called the Union Budget of India. It is referred to as the annual financial statement in Article 112 of the Constitution of India. It is the annual budget of the Republic of India presented each year on the last working day of February by the Finance Minister of India in the Parliament. It discloses the total expenditure and revenue of the last year, and it also discloses the proposed expenditure and revenue of the coming financial year. The copy of the Union Budget is then published in the form of books for the people of India. The White Book contains the bare provision of the Finance Bill, and the Pink Book contains the Memorandum of Changes in the Finance Bill. The purpose of the Pink Book is to explain the proposed changes in the Finance Bill. Please note that the amendment to the income tax is made once in a year through the introduction of the Finance Bill. When the Finance Bill is approved by both the Houses of Parliament and receives the assent of the President, it becomes the Finance Act. The provision of such Finance Act are thereafter incorporated in the Income Tax Act. Various rates of income tax for the financial year are given in the first schedule of the Finance Act. The first schedule gives the rates of income tax in three parts. Part 1 gives the rate of income tax for various assessee for current assessment year. For example, the Finance Act 2012 had given the rates of income tax for the assessment year 12-13, and the Finance Act 2013 has given the rate for the income tax for the assessment year 13-14. Part 2 gives the rates for deduction of tax at source from the income earned in the current financial year. For example, the Finance Act 2013 has given the rates at which tax is to be deducted at source in the financial year 13-14. Part 3 gives the rates for calculating income tax for deducting tax from income chargeable under the head salaries. The same rates are applicable for computation of advance tax to be paid in the current financial year. For example, the Finance Act 2013 has given the rates for the computation of advance tax to be paid in the financial year 13-14. Now we will see what all should be read to study the entire income tax law. First, we have to study the Income Tax Act 1961 amended up to date. This means after the incorporation of the provision of the latest Finance Act. For example, the current Income Tax Act is called amended up to date with the incorporation of the provision of the Finance Act 2013. Similarly, we have to study the Income Tax Rule 1962 amended up to date. Section 295 of the Income Tax Act has given power to the Central Board of Direct Taxes to make the income tax rules subject to the control of central government for the whole of or any part of India. These rules are made applicable by notification in the Gazette of India. These rules were first made in 1962 and are known as Income Tax Rule 1962. Since then, many new rules have been framed or existing rules have been amended from time to time, and the same have been incorporated in the aforesaid rule. We also have to refer to any circular, clarification and notification issued by the Central Board of Direct Tax. The Central Board of Direct Taxes, in exercise of the power conferred on it under Section 119, has been issuing certain circulars and clarification from time to time which have to be followed and applied by the income tax authorities. However, these circulars are not binding on the assessee or commissioner appeal or income tax tribunal or on the courts. Therefore, such circulars or clarifications are binding upon the income tax authorities, but the same are not binding on the assessee, although the assessee can claim the benefit under such circulars. You will also have to study the judicial decisions on the relevant matter of Income Tax Act. Any decisions given by the Supreme Court becomes a law which will be binding on all the courts, appellate tribunals, the income tax authorities as well as on all the assessees. Decision given by the High Court and Income Tax Appellate Tribunal are binding on all the assessee as well as the income tax authorities which fall under their jurisdiction, unless it is overruled by a higher authority. Now we will learn the scheme of income tax. In the two sentences appearing on your screen, we are going to understand the basic framework of income tax. So please read each word very carefully. Please pay attention on the words which are bold and italics. Now let's read the scheme of income tax. Every person whose total income of the previous year exceeds the maximum amount which is not chargeable to income tax is an assessee and chargeable to income tax in India at the rate or rates prescribed in the Finance Act for the relevant assessment year. However, his total income be determined on the basis of his residential status in India. Therefore, to understand the scheme of Income Tax Act, we need to know the meaning of various terms like India, person, assessee, assessment year, previous year, rate or rates, chargeable income, non-chargeable income, total income, and residential status. In the next session, we are going to learn the meaning of these important terms. If you have any query or doubts, you can mail me at ca.jaisha@gmail.com. For the private tuition on the direct tax, you can contact me on my cell number 981-9804-005. Please leave your feedback so I can improve my next session for a more effective learning. I hope you have enjoyed this introductory lecture. Thank you so much.